Bitcoin rose by 8% yesterday. Does this mean that the bearish times after the SEC filed their lawsuit against Binance are over already? Or is there a little bit more to the story? In this video, we're going to be jumping down into the technical analysis of Bitcoin, taking a look at those recent price action movements and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and it's the first place that we go to notify you of everything that's going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in Discord. Let's go ahead and jump right down into this video and talk a little bit around what is going on here with BTC. So as you can kind of see here, we have smart money concepts. Okay, this is an indicator from 𝗕𝗘𝗪𝗠𝗠𝗘𝗥𝗦, and it's reasonably okay. It's actually quite a simple process. It's basically just following the idea that big money enters the space and exits the space, and it leaves behind fair value gaps. It also changes the structure from bullish to bearish and bearish to bullish, and also shows us whether or not we have a high probability or low probability of going down deeper or rising up higher. So let's go and walk through what's going on here. We are still technically in a bearish structure. We can see that here with our change of characteristic into a bearish state of play. We can also see that we have a strong high, weak low situation. This is an indication that we're not likely to break the high, and we are more than likely going to break the low. Okay, this is only really showing you this because we have the bearish structure that has not yet broken. Okay, so essentially it's saying that we are likely to continue going down rather than going up, just simply because we have this change of characteristic that is in a bearish state of play. We can, of course, see these three green areas on the chart here. These are called fair value gaps. Fair value gaps are created when there's an imbalance in the order books. Essentially, so much buying pressure appeared in these areas, but not enough selling pressure. This basically means there's an imbalance between buyers and sellers, and price has to move up higher in order for those buy orders to get filled. Okay, this is really important because realistically speaking, there's only two things that generally matter when it comes to price movement. One being supply and the other one being demand. And if there's an imbalance in the supply and demand, price is going to react accordingly. If there is insufficient supply to meet the demand, price will go up. And if there is too much supply to meet the demand, price will go down. Okay, so we can see that there was a fair value gap over here whilst we had the news of SEC suing Binance, and price moved all the way back through it. It likes to fill these fair value gaps. So normally speaking, or typically speaking, when you see a fair value gap, the price will like to kind of go back and fill that area, put liquidity where liquidity was not before. It's not a rule that has to happen. It's just something that we observe and does happen from time to time and has a high probability of actually being true, meaning that eventually price will move down to the fair value gap. You can also see here that at the moment we're just resting on the 200 EMA. Okay, this could be support level for BTC here, specifically on the 1 hour chart, but I'm not optimistic longer term here. You can also see that the 50 EMA, the red line, which is a shorter term price action, is also looking to move on up a little bit. And it is just above the equilibrium, and equilibrium is basically the 50% fib level. Now price will react and want to also visit the 50% level or the equilibrium area, and it will either find equilibrium as support or find it as resistance. Okay, so coming down here, if we were to lose the equilibrium area, then we'll be talking about coming down deeper. Okay, so from Smart Money Concepts, what does it tell us? Well, Smart Money Concepts tells us we're probably in a bearish state of play, and we've got further to the downside to go. However, I don't think this is actually what is going to happen. I think that Smart Money Concepts here has potentially not got the right idea as to kind of what's likely to unfold. Although I would like the idea of just coming down and filling those fair value gaps, I think there's a low probability of that at the moment, unless of course something fundamentally happens in the space that causes more of a shake and we start to see a little bit more price action to the downside. Let's move over into the Elliott wave theory side of things. What do we see? Well, we saw yesterday the completion of a zigzag pattern. Okay, now this isn't terribly too unusual, other than the fact that we've got several different things that could be playing out here. First of all, our fifth wave target truncated, meaning that it failed to hit our targets, but it did complete its structure by going down lower than the wave 3. We can see that we were targeting out $25,101 to $25,278. We actually landed a low, if I get the candle wick here, we landed the low at 25,351 and then reversed to the upside, completing our zigzag pattern here. Okay, we did not go impulsive or anything like that. So why a zigzag? Well, the zigzag is important if we are to think of all of these other structures that we've been tracking here as other zigzag patterns that are leading us into a potential diagonal structure. Now, there's a couple of different things that could be playing out here. We could be looking at nested positions, which are also possible still. We haven't kind of avoided those yet, but because we continue to hit these 1.618 targets, we continue to nest 5-wave patterns inside each other. The next major one really coming down at 23,972. That's going to be the interesting zone for us to see what happens there. Now, the other things that could be going on here with so many 5-wave patterns are double zigzags and triple zigzags. Okay, now these can happen at lots of different levels. What we witnessed yesterday was basically the end of a kind of smaller zigzag pattern, and this could be building into something bigger as well. So we want to be a little bit cautious here because we could see many different things occurring. Now, under a diagonal based pattern, I would say, considering the size of the potential wave 1 here, we might end up looking for a really large contracting diagonal, and then if we have a contracting diagonal, our wave 3 will be shorter than wave 1 and our wave 5 will be shorter than wave 3, but it will be interesting to see how that plays out, if that is something that actually emerges here overall. Now, the other thing that we can't rule out is the idea that we are impulsive, but we're just nesting down positions. As you can see, yesterday where we had this push to the upside, we failed to go down lower. Let me just repurpose this line. We failed to go up higher, than our origin level here of this 5-wave structure. Okay, and this means that we may still find this as a wave 1, wave 2, and all of this is a huge wave 3 some point down the line. Now, because we haven't breached higher than $27,455.02, we could potentially still look at this thing as a wave 1, wave 2, and got to have a wave 3 coming down. Okay. It's possible. We can't rule it out until we cross higher than 27,455. Okay, so there's a few different things from an Elliott wave theory point of view that are interesting and concerning, but let's talk more about this move to the upside here. This upside move that we saw yesterday is very impulsive, and what I mean by this is there isn't really a wave count internally within it on the hourly chart. It's very much a straight lined kind of move upwards. Now, nothing moves in straight lines, and nothing goes down in a straight line and nothing goes up in a straight line. There's always relief rallies on either side of the spectrum, so it's understandable that we should be thinking about a move to the downside here, at least to kind of maybe fill those fair value gaps out and then see a move to the upside after. Now, the thing with this is I would look at this structure and think, okay, well, here we have a wave 1 or a wave A. We've got to come down into a wave B and then go up into a wave C. Okay. Now, there's a couple of different things that could be playing within that structure or within that, but for the most part, that's kind of how you would look at it. Okay, so for now, our Elliott wave theory structures here are saying we probably have to kind of see maybe a small bounce and then a move down to complete some kind of 3-wave structure right in here on the smaller time frame, something to this effect. Maybe find grabbing some of those fair value gaps and equilibrium potentially, and then some kind of move to the upside. Okay, now to put an end to the idea of a 3-wave structure taking us higher than 27,455, we would expect to go down lower. And I'm going to just draw a line in here. We'd have to go down lower than our local low, which comes in at the moment at the $25,351. Okay, so we can see that in there. Okay, so that's going to be the zone to kind of be keeping an eye on. At the moment, our high comes in at 27,391.77, and so yeah, we'll be interesting to see how this one plays out for the rest of today. Now, as I come on over into our larger time frame, so the weekly time frame, we can see that we actually found brief support down here on this previous area. Again, this is something that we've been kind of talking about for a while here, that this is the next kind of major area that we've been thinking we're likely to find support within, which is 24,316 to 25,231. And so basically you can see that we were finding support on our 50 EMA. We come down a little bit lower and we find the buying occurring in that range there. Ultimately though, we potentially can break back up towards 30k. I've been saying that for a little while now, potentially even moving up into the CME gap. If I bring that up here into our daily time frame, that CME gap is right up here at the $34,000 to $35,000, right? And we can kind of see that we have ourselves the situation where we're into the lower highs and lower lows, and those do have that tendency to want to break up. Okay, so it's still possible that we hit that CME gap slightly higher in the price chart. Okay, we can't rule it out just yet. So for the most part, all of that is also occurring. In terms of liquidations, we saw a reasonable amount. So as price moves down in the way that it had done, we saw a lot of long positions getting liquidated. And as price moved up yesterday, well, we saw a lot of short positions getting liquidated. Okay, so nothing terribly too unusual. And the numbers are not actually that scary. $118 million in liquidations in the last 24 hours. Nothing terribly too unusual there. Binance being 40% of the liquidations, again, actually not unusual in the way that it's gone about that. It's about $47 million of liquidation. So when we saw trouble with FTX, for example, we saw $800 million of liquidations with FTX. And so when we're kind of balancing things out here, there really isn't terribly too much going on from a liquidation point of view. OKX takes second spot at $32 million, for example, Bybit at $20 million. And so you can start to understand that there isn't actually terribly too much variation in that, and that Binance isn't really out of kilter considering it is one of the biggest exchanges in the world. So for the most part, nothing terribly too unusual going on across the board there. So yeah, I think ultimately, I'll be expecting a slight push to the downside, grab some of these fair value gaps, but then ultimately look for a bit of a move to the upside overall for BTC. Let me know what your thoughts are in the comments below. Do you think that we're going to be targeting out and trying to grab the $35,000 CME gap, or do you think actually we're just going to continue moving down slowly over time more towards the $20,000 CME? Let me know your thoughts in the comments below. If you found this useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications so you do not miss another video update. Guys, until the next one, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.